Hey, this is Warren Redlick. Thank you so much for watching. I'm here with Tad from Volt Equity. Tad is he runs an ETF that I think it's TSL that focuses on Tesla stock, and it's an interesting strategy. I think it's worth for people to hear about. I'm not endorsing the strategy. I'm not negative on the strategy yet.
The Cybertruck.
Honestly, this is the first time I've talked about it today. I know there's another fund called something like TSLA that has a maybe related strategy. And I'm just a Tesla investor. I don't invest in funds, at least not yet, but I'm open to hearing what Tad has to say. So, Tad, would you tell the audience, before we dive into your fund, a little bit about yourself first, before we get into Tesla? What's your personal history like? How did you get involved with Volt Equity? Is it your company? Is it somebody else's company? Do you have some kind of finance background? How did you get to where you are in that?
A majority of my background is in software engineering. I'm based in Silicon Valley, and I've been working in SF for the past 10 plus years. And I got in from the retail side, so I'm not a traditional asset manager. But so from the retail side, around 2018, 2019, I really believed in Elon's vision. And over here, people are used to taking risks and taking pay cuts in order to make bold moves, as opposed in terms of what could happen with equity. And I didn't really believe in the companies around me, but I believed in Tesla. So the way that I played this thesis out was through. I don't recommend this to anybody, by the way. Definitely not recommend this. Not investment advice. But I pulled money out of my house because I'm all in on Tesla, and then I put that into Tesla stock, and then Tesla took off. So the way I reason through it is
I think you told me before you started in 2019.
yes, yes. So
Okay.
so the way that I thought about it though is that even if it didn't take off, people take pay cuts all the time, right? So the worst case scenario for me, because I was a software engineer, is I can take the hit. Not everyone can take the hit, but I can take a pay cut of 10% or whatever of paying off a mortgage, a second mortgage for a long time, but not everyone can take that, right? But that was the trade-off that I was willing to make. People around me were taking pay cuts for equity in their own startups, but the most lucrative investment that I saw that was worth the risk was Tesla at the time. So I invested in that. It paid off, as we know. In 2020, I was trying to launch an ETF at that time because I wanted other people to also benefit from Tesla. So Tesla was like the main reason why I wanted to launch an ETF. I learned the hard way that it takes a lot of legal, a lot of back and forth, SEC, everything. So it actually didn't end up launching in time. So even though I was an early investor, it took a long time to launch the ETF. And by the time we launched it, it was already 2021, and Tesla has been kind of flat since then. But I still had the ETF basically, and that's been my story. I reinvested all of the gains that I had essentially into the CTF business. So yeah, that's what happened. It was very expensive to launch an ETF, but essentially all of my funds went back into this structure.
And credit to you, like I tried to do something a little different. I tried to create a special purpose vehicle to invest in the Boring Company or I think it was Boring Company or Neuralink, one or the other, like try to get in on a funding round. And creating an SPV, a special purpose, this is kind of like a fund that invests in one company, but it's a privately held company, it's not a publicly traded company, and there's a whole bunch of other rules associated with that that may make it I don't know if it's harder, but I ended up just feeling like I wasn't able to get enough investment to justify the work and the cost of setting up the fund. So you got ahead of me. You actually got the fund set up.
Yeah, yeah, it's
And I think
oh
yours may
man.
be harder because I think compliance with an SPV is less than the compliance with a publicly traded ETF.
Yeah, for sure. For sure. There's just so much compliance involved, and but it's been a wild ride, and I really appreciate all the learnings that have happened until now.
You have this fund called it's TSL, correct?
TESL, so it's Tesla
TESL.
without the A. Yeah.
Okay, so TESL. And Tesla stock trades as TSLA, and there's this other fund that I'm aware. I think there's probably more than one, but the other one that I'm aware of is TSLL. So if I'm correct, your fund invests in Tesla stock and no other stocks. Is that correct for starters?
Yeah, so at a high level, it invests in Tesla exposure. So TSLL is always 2x Tesla exposure. So they're not actually Tesla stock. Technically, they're using instruments called swaps and things like that. We don't have to go into the details, but it's the same thing. We get certain levels of exposure, either 80% exposure, 100% exposure, or 150% exposure. So the way that we're different from TSLL is that we're not 2x exposure all the time. We actually rotate between different levels of exposure depending upon what's happening based on momentum indicators. So
Can
it's
you explain to people
yeah.
what exposure means?
So exposure is like essentially the same thing as if you held that much. So if we're talking about just 2x exposure, what that means is say Tesla is up uh, 10% in a day, then 2x means it's up 20%. But if it's down 10%, then that means 2x means it's down 20%. So everything is magnified, not just on the up, but also on the down.
But
Then,
sorry, let me just be clear. I think what you said was your fund is either 150%, 100%, or 80% exposure,
yes,
which
yes.
means if it's up 10, you're up 15. If it's down 10 and you're at 150, if you're at 150% exposure and it's up
hmm
10, then you're up 15. If it's down 10 when you're at 150% exposure, you're down 15.
Yes.
Um, and if I understand without you having told me yet, your strategy is to be at 150% when it goes up and 80% when it goes down.
Yep, yep. If you understand, yep, you do understand it correctly.
And okay,
And
so wait,
yeah,
before you go, so mechanically, how does somebody get to like? I invest in your fund. You've got $1 million. I'm making up a number. You've got $1 million in your fund. Do you buy $1 million worth of stock and now you're at 100% exposure? I can understand that part.
mhm.
Um, I don't understand how you get to 150% exposure, and I don't understand how you get to 80% exposure. My guess on the 80% is you sell 20% of the stock and you hold cash, and the 150% exposure is you're borrowing money against something and buying more stock. So you're leveraging. But I don't know, so maybe you could explain.
Yeah. I think that's a great question. So there's a huge difference between borrowing money. So that's in finance world, that's margin, going on margin, very dangerous because you can blow up and lose everything. So that would not be allowed most likely in an ETF structure. So the way that that happens, which is very important, is that we simply just, at least for right now, we could do it with swaps and all that stuff. Swaps are very complicated. We don't have to go into that, but we essentially just buy TSLL or do swaps. But yeah, essentially TSLL is the same thing. So TSLL is 2x Tesla on the daily level. So we could just buy enough that we essentially get 150% exposure. And simple as that. There's no borrowing money, there's no nothing.
And the 80%, how do you do the 80%?
80% is we just sell. So we can
You
we
sell
can
it
either
all cash.
sell yes, sell and hold cash. Well, so this is at the very, very high level. Now, when it's actually done at a like a super granular level, we might be holding treasuries to try to eke something out instead of cash.
Okay.
And then
But
there's
you're not
also
selling and holding S&P 500 ETF. You're selling and
no,
holding cash
yeah.
or bonds.
So
And then wait,
well,
hang on a second.
not bonds, not bonds. Yeah.
So the other question I would have then is, well, how does TSLL get 2x?
Yeah. Yeah. So before we go there, in terms of the overall strategy and the prospectus, we also can do options. So we can do options up to 20% of the portfolio, just FYI. So that part is not strictly Tesla related stuff, but the other part of the portfolio has to be strictly Tesla related instruments. Okay, now regarding TSLL, that is the way that they achieve that is through swaps. So we also have the ability to do it through swaps, and that's
What's a
essentially it's like
swap?
these. It's like a special agreement. So we're like working through certain banks like Goldman Sachs and different places that can provide these special contracts essentially. So in this area of finance, these are all called derivatives. So options are a type of derivative. Swaps are a type of derivative, but basically it's like an agreement with the bank. It's not exactly a bank. Goldman Sachs not exactly a bank, but you're having an agreement where you say, hey, when Tesla goes up 5%, uh, do you agree to give us the return of 10%, right? And then when they agree to that, that's all basically paperwork. And normal people do not have access to swaps.
So when
So,
I'm at Goldman
yeah,
Sachs, why would I agree to that? What are you giving me? What are your investors giving Goldman Sachs in order to get that deal when Tesla goes up 5%, Goldman Sachs gets 10%? What does Goldman
yeah.
Sachs get for that?
They get they charge a fee for that. So that's a great question. So there definitely is a fee. They don't do that kind of stuff for free. So yeah, that's what it is in a nutshell. And there are a lot of risks with leverage. So basically, whether it's TSLL, any type of leverage, any fund that uses leverage, daily leverage, there's a lot of risk and there's a lot of unintuitive risk as well. So, for example, you can have a 2x ETF like TSLL. A Tesla could be 0% or up 2% in that year, right? But TSLL could be down, or a leverage ETF could be down 10%, 20%. And it's not intuitive, but the leverage ETF can be down even when the underlying is up. And the reason is that it's not leverage at a overall level, it's leverage at the daily level. So when mathematically, when you do all the, compounding and stuff, some weird unintuitive stuff can also happen. So just, yeah, it's just interesting. Like daily leverage is an interesting thing. It's not the same thing as, oh, I'm gonna just borrow 50% more. Or I'm just gonna borrow 100% more. So therefore, if Tesla goes up 2x, this will for sure go up 2x. It's not as simple as that. But yeah. Mhm.
So I think part of your strategy is um, you want to be at 150% when the stock is going up, and you want to be at 80% when the stock is going down. What how do you decide when to go 150%, and how do you decide when to go 80%? And how do you decide when to go 100%?
Yeah. I think that's basically we use a momentum strategy. So in you could have fundamentals, you can have like technical analysis, all this other stuff. So when you do technical analysis, first of all, to be clear, I don't believe in day trading. I think day trading is personally, I don't do it. It's not a good idea. It's
It
hard.
sounds like day trading.
No, yeah, exactly. But it's not. So to compete against all the computers that are in New York, I think that's too crazy, right? But there may be a thesis that Tesla is a contentious stock. So I believe that Tesla is a contentious stock. What that means is when the mainstream media looks at Tesla, they get it wrong. I've seen this like over and over and over. Like the mainstream media is like, oh, like this Tesla's the worst thing ever. And then everybody sells and panic sells and they're just like, oh, Elon's the worst guy ever. And they go crazy. Then when so they sell too much. Then when they buy, they're just like, oh, Tesla's going to the moon. It's going crazy. They kind of buy too much because of FOMO. So if you believe that there is Tesla's a contentious stock, like in society, there is tendency for this, then I personally believe that there might be an advantage to a momentum strategy at the higher level, not at the daily level, but within weeks and months and that kind of thing. If you look at momentum strategies for the past 20, 30 years, like for tech stocks, they've actually outperformed other types of strategies. Like it's even outperformed, S&P 500 and everything. Like if you just look at momentum strategies. It's not for everybody. Not everybody believes in it, but if you believe that Tesla is a contentious stock, it's like a cultural stock, and is subject to this, and you think that it's
I
going to
don't think there's
happen in
any
the future.
I don't think there's any question that Tesla is a contentious stock. It's a highly volatile stock. We know the media loves to talk about it. We know that, Canada wants to ban Tesla. Who knows? There's all kinds of crazy stuff that happens in the media. The problem with um, my perspective, the problem with playing the that strategy is I, as an investor, have to trust that you know what you're doing as the portfolio manager. And there's a guy, Chris Camillo. I think his channel. He's got a channel with two other guys called Dumb Money Live or something like that. And he's got this whole like social. It's something like that where you're looking at what social perceptions are of a stock, and you're trading on that, and it ends up being with him. I'm not a fan. Well, then you pump the stock and your fans buy it, and then you sell it after your fans bought it. Like, how do you avoid that? Now, you're not in that category because not that many people know who you are. You don't have a huge channel. People don't see you. So I'm not suggesting you're doing that. But I think the problem is the problem I have with momentum strategies. Okay, like I'm just a buy and hold investor, and I have started buying long call options, which is like a 2 year out thing. Is if you believe in the stock, you don't want to be at 80% when it goes up. You don't want to be at 150% when it goes down. You want to be at 100% and ride it. And so, what you're suggesting is that people should trust you that you're going to be at 150% when it's going up, and you're going to be at 80% when it's going down. And I don't understand why people should believe that you are qualified to make those calls. I don't think anyone is qualified to make those calls. I don't think
Yeah,
Gary
yeah,
Black is qualified to make those calls. I don't think Elon is qualified to make those calls.
yeah.
So
Uh,
why should people believe that anyone is qualified to make those decisions? And if so, why should they believe you are?
Yeah, yeah. So I don't think I am either, actually. So this is actually driven by some software that we've developed. It's called Eagle Trend, and we use Ambly.io as well. But I have a lot of software engineers on my team, and I come from software. So it's essentially basically momentum based on technical indicators. And I'm not doing it based on my opinion. The opinion part is actually the options part is actually based on my opinion. I think options are very effective for self-driving and certain applications of options. I love like call options is especially important for Tesla, where we could be 80% on the overall momentum strategy, but I might be bullish as ever that the self-driving is going to be released. So the call options are like crazy, you know? So, but then in terms of getting it right, it's not going to get it right. Like we have not gotten it right historically, every single day. From a day-to-day point of view, we're not getting it right like all the time. But the important thing to keep in mind is, well, what has happened over long periods of time? Like months at a time, over a year. People's perception and FOMO and different things, it undulates. So you may not be right exactly from a day-to-day or moment-by-moment thing, but on a time horizon of a couple months, 3 months, 6 months, this might be something that people do anyway. Because when you think of something like TSLL or like a leverage 2x ETF, you're not actually supposed to buy and sell that. I mean, you're not supposed to buy and hold a leverage ETF, right? Because there's all these issues with buying and holding it. You're supposed to go in and out occasionally for it. So if people are already doing that, then this might be a more convenient way to do it. We're not claiming to know like the direction of anything or anything. It's basically on a very broad brush level. It's just generally if it seems that like it's going above the moving average, then it increases exposure. If it's generally like more
You're ducking
bullish,
the
then it
question.
decreases.
You're effectively ducking the question. I said, why should people trust you? And you say, oh, it's not me, it's the software. Okay, well, why should we trust the software?
Yeah,
Is the software some sort of artificial super intelligence that has some ability to recognize patterns beyond human ability? And like I don't believe that even artificial super intelligence will be able to outperform the market. Like it's the market is the market.
Yeah,
Uh,
yeah. So that's a really great question. No one can predict the future. But if you do believe in like historical stuff, then if you look into the past, if you run a back test, generally a momentum strategy would have outperformed Tesla. And we've done a lot of research on this and all that
I
stuff.
don't. So first of all, I don't agree with that. You can always go back and identify a strategy. Well, this strategy would have performed a buy and hold strategy if we had started it at the time. And then you look and say, well, if you'd started it 2 days earlier, it would have underperformed. If you started it 2 days later, it would have underperformed. You can always cherry pick history
Yeah,
and
yeah.
identify a strategy that would have outperformed. I think it's very well established that the strategy that doesn't, like I think was it CERN Basher, somebody said that all of Tesla's gains over the last, I don't know, 5 years or something like that, if you held on these 41 days, you got all the gains. And if you missed any
Yeah.
one of these days, there's certain days where Tesla stock just went up a lot, and you're counting on some software to sort of pick the days to be in. And I don't buy that. I think that the simple reality is that buying and holding is the idea that software can somehow magically figure out which days to be in and which days to be out, or that you can as an investor, to the audience, like the idea that you can play some sort of timing games. I just posted this on X today. My friend Dylan Loomis posted, he bought at 327. Did anybody buy lower than me yesterday? Send me proof. And I think there are people who are waiting for the stock to fall to 300 to buy. It's like, well, what if the stock falls to 315, you don't buy, and then the stock goes to 1,000, and you
Yeah.
didn't buy because you're waiting for 300? Like, and you can, any strategy you tell me has that problem. You didn't buy when you should have bought. You didn't sell when you should have sold. Instead of just hold it. If you believe it's going to 1,000, if you believe it's going to 2,500, if you believe it's going to 5,000, like, why are you playing games? Just buy and hold it. And
Yeah, yeah.
let me just turn for a second. The other thing I want the audience to understand is you run an ETF, and your ETF invests some of its funds in another ETF. So what's your expense ratio on your fund, and what's the expense ratio on the fund that you invest in?
Yeah. So the expense ratio for TSL is 0.95%. And then the expense ratio for the other fund is, I don't quite recall, but it's similar. It's like somewhere around 1%. Usually leverage ETFs are around that 1% or higher. So yeah. So basically, yeah, we are
So
looking into.
if I invest in your fund,
Mhm.
then 1% of my money is going to your management fees, and some chunk of, and you're investing some chunk of the money in TSLL, and they're taking 1% management fees. I'm ballparking at 1%.
Yes. Hmm.
So if you were just a fund that invested in TSLL, then I would basically be spending 2% on management fees of my assets, hoping that you guys manage well.
Yeah, the math doesn't quite work out that way because TSL is 2%. So when you hold a certain amount of Tesla, you don't actually need that much TSLL. It might be like 30% TSLL or whatever. You don't actually have to have the whole thing be TSLL because the maximum exposure is 1.5, not 2x.
Right.
So in the end, though, it does add a little bit of management fee, but it's not as high as 2%. But yes, that is definitely the case. So this is only for people who, it's not for every investor. It's only for people who like actually think that Tesla will continue to be subject to momentum, and they're comfortable with this type of investment strategy. So it's nothing's ever like for anything like I personally love passive investment vehicles. That's because I love being in the market and all that stuff. There are some people that appreciate active investing though. And I personally believe that there aren't enough people in asset management that actually care about Tesla. So most of the time they're like, hey, we're going to actively manage, but they don't have the correct thinking about companies like Tesla. They don't think that Tesla can get big. They don't, they hold like 2% or 3% Tesla. They don't get AI. They don't get any of that stuff. So for me, I believe that it's a service that For those who are interested in active investing, not everyone is, right? Like they might be like, oh, I want to just do my Tesla myself and whatever strategy they have. But there are some that it's just another option, right? If you're gonna send it to a money manager, do you want to send it to a money manager who, is not really forward looking and gonna put, they have a certain mindset about tech stocks, right? Or like someone who actually thinks that Tesla's going to go really, really big. And it's like how can we capture as much of the upside as possible? Yeah, and there's a risk because with any active management, there's no guarantee that the active manager is going to outperform. Like that's hands down, you're totally right on that. Um, but yeah, but then
So
people
tell me
do
about
trust.
tell me about the
Yeah.
options side of your fund. You said something like up to 20% of your fund is invested in options. What's your options strategy, or how would you describe it?
Yeah. So I uh I think one thing that is the reason why it was hard to like include options into an ETF, it makes it harder to get approved and all the other stuff. The reason why I wanted an options aspect instead of, oh, we're just simply going from 150%, 100%, whatever, like that kind of thing, is because of the way that tech company like VCs invest, right? So the way that VCs invest is that it's a small chance, but it can have a huge crazy payoff in these disruptive names. And one crazy payoff basically wins everything, right? So when people usually think about the stock market, they just think, oh, okay, you're just going to invest in this, and then they don't think like a VC. So if it goes down a little bit, then they're like, oh, you're stupid because it went down. But they don't realize like when you do options, I thought that it was going to go down. We think that it's going to go down to zero. That's the risk, but we only risked a very small amount, right? But when it actually pays off, it has huge outside returns. So from my mind is like, okay, how do we get this type of thinking out into the public markets? Because not everyone's, you know, knows how to calculate options and do all the formulas and do like options, which is on a time frame, right? So how do we get this type of thinking, like this VC type thinking, into an easy to access vehicle? That's why I wanted options in there, because specifically for Tesla, usually when people invest in options, it's only for downside risk. So when there's like a catastrophic event, if everything goes down, you want insurance, and that's why you buy put options, right? But I personally think that there is an upside risk. There's not, there's no other like at least money manager that I
Upside
know of
risk, I like that.
that
Upside
thinks
risk.
that there's yeah like no at least I don't know of anybody that thinks that there's upside risk in Tesla. I just don't know of anyone. If you happen to know, I would love to know. But that's what I'm protecting against is that what if Tesla actually solves self-driving, releases it, the fleet turns on, and then Tesla goes to the moon. But then I would feel bad if like Tesla went to the moon and then the ETF could not like capture that part of it, right? And to capture that the best, it's actually, in my opinion, through options because options provide there's this concept called convexity, but it's essentially like asymmetric exposure to the upside because
So
yeah,
let me take this on for a second. So I invest in what I call long calls, but basically leaps. They are
yeah,
options that give like a really simple example. I'll buy an option, and it's one option is an option to buy 100 shares at this price. So I'll buy an option to say, like Tesla's trading at $400 a share. I'll buy an option that says in January 2027, I can buy 100 shares of Tesla at $600 a share. If Tesla's trading at $600 or less, then that option is worthless in January of 2027. And this is like there's a whole strategy of like selling along the way, and I'm not talking about that. I'm just saying, suppose you play the game to the end, and the last day, this is what the option is worth because you're going to be able to buy the stock at this price. So if the stock is trading at $1,000 a share, when your option says you can buy it at $600 a share, you can now buy 100 shares of Tesla for $600 or $60,000. I think I've got that right. Yes, that's
mhm,
$60,000. That is worth $100,000. No, sorry, wait. Sorry. 100 shares of Tesla stock at $600 a share. I think that is $60,000. But the actual trading price is $1,000, so that's $100,000. So you're making $40,000 in profit. So depending on what you paid for the options, that could be a very, very large gain. And what I'm seeing is you pay um, $10 a share, so $1,000. No, I'm paying $70 for that option, let's say. So I'm paying $7,000 for that option. If it works and I make $40,000, I got basically a 6x,
Yeah.
right? That's the strategy that I'm playing, and I'm doing that with up to 10% of my holdings, ballpark 10% of my. I was at 5%. I've moved up to 10%, and the reason I moved up to 10% is because I think Tesla is going to demonstrate a working robotaxi network this year, if not early next year. And my options are January 2027. So I have a long
Mhm.
window for Tesla to solve this. And then once Tesla demonstrates a working robotaxi network, then I think general investors, whether it's institutional investors or retail investors who don't get it, start to figure out, well, wait a minute, what is this company worth if it's delivering rides at a 30 cent a mile cost and selling them for $2 a mile or $1 a mile or whatever, it doesn't matter. Like all of a sudden you start to see, wait a minute, this is a very, very profitable and very, very large market. So that's my approach, which is 2 years out of the money options. The stock is trading at
Mm.
400. I'm buying a $600 strike price. Strike price is the price you're buying it at the strike date, which is the date that the option is available. Out of the money meaning the stock, the price for the option is higher than the current price, right?
Mhm.
So you say you're pursuing a strategy that I think also buys calls. Are
Yeah,
you
very
buying them
very
2 years
similar.
out? Are you buying them out of the money? What is your strategy there?
Yeah, yeah. So I think we have a very similar mindset in that uh, if the market realizes there could be an asymmetric return. So I think that's great. I mean, not everyone thinks that way because they only think
Yeah,
linearly or,
let me just be clear. If I bought the stock at 400 at the same time and the stock goes
Mhm,
to 1,000, I get a 2.5x. But if I paid so I got 100 shares, right? I paid
mhm,
$40,000 and I get a, if I buy let's say I buy $8,000 worth of stock, right?
mhm.
Well, then I bought 20 shares, right? At $400 a share. The same $8,000 buys options that might get a 5x. I'm getting a 2.5x on the stock. I'm getting a 5x on the option. Now, my rough calculation is when I do these games and I'm buying these options, if I would have gotten a 2x on the stock, I'm going to get a 5x or a 6x on the option. There's a high risk in buying these options that you end up with zero if the stock isn't trading at the strike price is trading at the strike price or below, then you're going to get a zero. And if it's
Yeah,
trading just a little bit above the strike price, you're still losing money. It has to go significantly above the strike price to make money. But if you think the stock's going to double, right, or if you think the stock is going to triple or whatever, like I think the stock is by January 2027, it might be trading at $1,500 a share. The gain from holding these options is so dramatically larger than the gain from holding the stock. So that's
yeah,
another way of increasing, but it's not playing the timing momentum game. I'm not playing a timing momentum game. I'm just, and what I'm actually doing is I'm actually selling stock and then buying options. So, but does that
yeah.
sound roughly like your strategy, or would you describe it differently?
Yeah, I think that that does sound like my strategy in a way. I mean, the thinking is in line, right? Because there's these unexpected, like we think that there's a, efficiency that can be made in the markets. I think that first of all, I do think it's a timing game. So you may say that it's not a timing game, but options inherently have a time window. So you are saying that you think it will happen within a certain time frame. So it
Say
is
two
still a
years.
timing game. Yeah, yeah. So I might have a different timing in that, oh, I think generally within 6 months or something, I think the algorithm is generally like biased toward if it's been going up, it might continue to go up, right? Or when it's going down, it might continue to go down. So it's just a different type of timing. But then I layer on top of that also robotaxi risk. So I also have very similar mindset that robotaxi will surprise the market. And for that, it's not simply a momentum strategy because Tesla can go like crazy high, and the momentum strategy will not trigger. It'll be too late because it shoots through the roof and everybody realizes, but it will be too late to trigger. So that's why I think that like an insurance policy with options is better for that. So even though it was harder to launch an ETF in this structure, I felt like this was like the best way to do it.
Are you buying options that are 2 years out? Are you buying out of the money options? What is the strategy for options specifically?
Yeah. So the thing is, uh, I this is an area that I don't think I can say too much because of compliance and everything. Because this is not in the normal part of the strategy, and I don't want to say too much, but I can say at a very like high level. But I can't talk about like specific strikes or anything because I don't want anyone to front run the fund or like all these issues, right? So, but in general, I can answer any types of questions of when I think that Tesla is going to hit robotaxi, or in terms of like what's the most efficient way to do it. I think that I try to get the best price on the options front, and sometimes the best price is counterintuitive. So that's why I use tools like Ambly.io and different things. I'm software team made it, just full disclosure, but um, because it will show whether it's really expensive. So sometimes the risk return will not be worth it. Like if holding stock is, you can get 2x, but holding the option you can get 2x, then it's not worth it. Or even if it's 2.5x, in my opinion, that's not worth it because you can lose everything, right? So sometimes the premium is too expensive, but in some cases, you can look from a like from a calculation point of view. Oh, the market is pricing in a probability of X, but you get a probability of Y. So an example of this is when Trump was elected. So whatever people think of whether they like Trump or Kamala or whatever, um, right before the market was pricing in I think it was like a less than 3% chance that Tesla was going to go up 10%, right? That's a crazy like options opportunity in my mind because I thought, hey, if Trump wins, even if you think that it's a 50% chance that Trump wins, Trump doesn't win, the market is pricing it in that Trump is going to like if you really believe that Tesla's going to go up 10% if Trump wins, and that's what happened, more than 10%. But if you really believe that, the market's only pricing in a 3% probability. Then, uh, and if you think that it's 50%, then it's like from an expected value point of view, it's a no-brainer to allocate a certain amount to this play, in my opinion, right?
Well,
From an options point of
let me just twist that a little bit. I think the probability issue where you and I agree is that you and I think the probability of Tesla delivering a robo-taxi network before, let's say, January 2027 is nearly 100%. And the market is pricing that probability as if it's nearly 0%.
Yeah, exactly. And when the probability differs from what we believe, that's where the opportunity lies. If the probability is the same, then options are not the way to go. Like then basically that's not the way to go. So I think
So
one yeah.
let me address something because there's something here. So you're not being transparent about your option strategy, and this is a problem for me if I was going to advocate this. But I wanted to say that one of the problems with my option strategy is it's not easy for everyone. The reason it's not easy for everyone is because at the cheapest right now, if you're going to buy Tesla options, the minimum price to buy like way out of the money call options is somewhere around $7,000 for a transaction. And if you want to buy it at a more moderate price, where I mean, maybe $5,000. If you look at what the option price is, if it says it's $50, that means it's $5,000 to buy one option. So if you're going to do this strategy, you need to be doing larger transactions, right? And some people, like I have a substantial amount of funds, and when I'm investing, 10% of my portfolio in something, well, that means I have a lot, and I can make somewhat large bets, and I can afford to buy options. But some people might have, let's say you have $100,000 in your portfolio, and you want to put 10% in long call options. Well, there's not a lot of choices when you have $10,000 to invest to buy. It's like you can buy one, right?
Yeah.
Maybe if you're lucky, you can buy two, right?
Yeah.
And you don't get the option to say, well, I want to buy at it's trading at 400. I want to buy at a $500 strike price. That one's too expensive. If you want to buy at the $800 strike price, that's within your budget, but now you have much higher risk on that because the chances of making 800 are the probability of making $800 a share is much lower than the probability of making $500 a share. So if somebody has a fund like yours that is more transparent than you've been about the strategy of this is what we're doing, and your strategy aligns with my, like if your strategy is I'm playing the probabilities on the Trump election, like I don't think short term like that. I'm looking 2 years out. um, I definitely see that if your strategy if your strategy is transparent and aligns with my strategy, it might be easier for someone to buy into your ETF and get exposure to those long options than it would be for
Yeah.
them to buy the options themselves.
Yeah, and thank you for bringing that up. So I can say that historically for the CTF, before there was a strategy change in November, by the way, from a prospectus point of view, but historically when I've managed this ETF or this general thing, before it had things that were not just Tesla, and then in November it became just Tesla, but basically, in general, it's always held these long leaps, like just like yours. It's usually been 1 year, 2 years out. So that's what I can say. I don't want people like hold it to me and be like, "Hey, you're not holding long leaps, or you're not doing this," and like, or someone to say, "Oh, they got an advantage because they knew that Ted was going to do long leaps or anything." But just in general, like, hopefully people can take what they will.
Your
But
fund
I
isn't
like
your fund
leaps.
isn't your fund isn't big enough to front run. You
Uh,
don't have $1 trillion in
no,
assets or
no, yeah, yeah, yeah,
$100 billion in your fund. You've
exactly.
got like 1 million. Do you have like more than 10 million in assets in your fund?
No, no, no. Zero chance that anyone can front run. Zero chance that anyone can do anything, because it's not a. It has. You're right. It has to be 500 billion or more, or whatever, usually to like move Tesla or anything, right? You're not going to move Tesla. Tesla's $1 trillion company, right? But the weird thing about the SEC is that they still care no matter your size. It doesn't matter. So, like in terms of compliance, it's like we are compliant like crazy. Like we like care about every single thing, and we do it to the T because we don't want to be dinged on anything. So it doesn't matter probability of it happening. We just want to be above board with everything. So that's why I'm still bound by compliance, and it is what it is. Yeah.
Okay. I mean, I would just say if somebody said, I have an ETF and 20% of our ETF invests in 2 year leaps and Tesla out of the money options, I'd be like, okay, if you can't afford to buy leaps yourself, this might be a good strategy. And like I'm not even convinced that my own strategy is a good strategy. I think it's a good strategy. I mean, I really think that some of my options, like let's suppose Tesla goes to $2,000 a share. All right, well I got a 5x on my stock, but I got a 20x on my options. There's some really outsized gain potential. I think, yeah, I think one of them I was looking at like a potential $200,000 profit if it goes up. If it hits certain numbers. So I do think that there's a if you I don't think it's a wise strategy for 100% of anyone's portfolio, right? I think that
Yeah.
there are risks. It's hard to look to your like I think it's very hard to predict next week or next month. I think with something like robotaxi, it's like people are like, well, Elon says they're going to do it in June. Yeah, well, Elon says they're going to do it in June. Franz says they're going to do it in June. Lars says they're going to do it in June. Ashok says they're going to do it in June. We're not just talking. It's one thing to say Elon says they're going to do something and the rest of the team isn't saying it. When the rest of the
Yeah.
team is on board, this is something I've noticed with Tesla, or SpaceX, when the rest of the team is saying it, it has a lot more credibility than when it's just Elon saying. When it's just Elon, it's like, okay, Elon's fantasizing about the future, and we don't You shouldn't
Yeah.
trust his timelines. He's sometimes early, but he's often late on those timelines. But when Franz and Lars and Ashok are all saying it's happening, I'm a lot more confident it's going to happen. And like if it's not June, it's July or August, right? But if your
Yeah.
options are for January of 2027 and you've got like a year and a half from the day they say it's going to happen, I feel a lot more confident in that. So I feel like a lot of, and sorry, let me take a step back. I want your thoughts on this. I've had this idea in my head for a while and I've said it a few times and I haven't gotten a lot of pushback. I think something like 1% of the market understands Tesla the way that you and I do. You and me and James Douma and Omar and Jason DeBolt, whatever, some of us see
Yeah.
it. Different, we all have slightly different perspectives, but we all see, no, this company's going to grow like crazy over the next couple of years, 5 years, whatever, based on Robotaxi and Optimus. And I think 90+% of the market says, oh, Tesla, they make electric vehicles, right? Right? They're not aware
Yeah.
of robotaxi. They've seen like and like you can totally understand it. They've got a humanoid robot walking around. I went to a car show and I saw a company that had a car like a flying car. I think it was
Yeah.
Xpeng has a flying
Yeah.
car at its car show exhibit. Like, yeah, I don't think they're actually going to be delivering that anytime soon. It's nice, and I can see where some regular investors see Tesla has a robot walking around. Like, okay, that's nice, but what's the next car? Right? They don't
Yeah.
see it as a car company. So I see 1% of the market gets it, and we're very heavily into Tesla, if not all in, like I am. And
Yeah.
then 90+% of the market is completely oblivious to Robotaxi and Optimus. They're not
Yeah.
pricing it in at all, right? And some of them are watching momentum, and some of them like
Yeah.
Elon or whatever, but no, they don't see what we see. And then there's some group of investors between the 90+% and the 1%, and it may be 9% of the market or 4% of the market, whatever, who kind of get Robotaxi and Optimus, but
Yeah.
they're traders. And their goal is to buy Tesla at the low before the big run up. And they don't want to buy it now because they want to wait till right before the 90% get it. And
Yeah.
some of those investors are like, okay, I want to get it before these other idiots get it. Right? Because if
Yeah.
1% get it and then the 4% start buying, you 4x demand for the stock,
Yeah.
right? When the 90% get it, you've 90x the demand for the stock. I'm not saying the stock goes up 90x. I'm just saying all of a sudden there's a lot more demand for the stock. The price is going to go up. When the market gets Robotaxi and they start pricing Robotaxi, and I don't think the market gets Optimus until sometime in 2026 or 2027. But I think the market will have to start figuring Robotaxi towards the end of 2025, if not in 2026. If it's operating in Austin, Texas, and California before the end of the year, at some point, some investors are going to say, this might be worth something. We should probably model this, right?
Yeah. Yeah.
Oh,
Yeah.
there's a company called Ark
For sure.
Invest. They've already modeled it. Wait a minute, their numbers are much higher. And some people start buying the stock, and now the stock goes up.
Yeah.
Um, I don't know when so does that analogy of the 1% get it, the 90% don't, and there's some people in the middle who are going to trade on it? Does that make sense to you?
Yeah, totally, and it totally resonates. I think that's where the opportunity lies, where if people don't get it, then there's opportunity, especially in the options world, because that's how it works. It all works on probability. So, I guess I think about investing differently in that sometimes you might make a ton of tiny bets, and then say say you think that the probability was like 50%, 60%, but everybody else thought the probability was 3%. Even if it didn't turn out the way you thought, in my mind, I can rest assured that I did the right move because I think there was an opportunity there. People only look at outcomes sometimes and they don't look at expected value, which is how VCs think, right? For disruptive investments. So I think that that's really spot on. I think you're like thinking about it correctly. In terms of the actual implementation, there are some nuances sometimes because some certain things like spike the premium for options and how to model that out and what's the best strategy, whether it's leaps or rolling options every 6 months or different things. That's more of an implementation detail. And yeah, I mean, for us, all I can say is we're trying to capture that sudden realization as efficiently as possible because we know that for a certain period in time we're going to suffer premium loss. So, but in terms of the overall goal is like how do we capture as much of that as possible for investors? And that is my viewpoint is that I think that it's going to be sudden and the market is going to realize. One thing that's a slightly, an adjustment. I don't know if this is a point of difference between you and I or whatever, but basically, when for sure, the improvement in FSD is definitely like it's crazy. It's exponential. No one knows what's gonna happen, right? I really appreciate Omar for introducing me to FSD back in the day and everything, right? And filming stuff with me and all the other stuff. It was great. I've had FSD for quite a while now, and it was crazy. Like in the beginning, there's crazy amount of interventions, and then everyone's like, oh, it's gonna take forever, but they don't see firsthand like when it goes from 10 interventions to 9 to 9 to 9 to 9, and then suddenly it's like 5, and then suddenly it's like 2, and so like it's an exponential improvement, and they don't feel it, but we feel it, right? People who are actually using FSD, and if you just look out, it's
Well, no,
gonna be surprising.
I would even say people who use FSD don't really see it because what you're doing is you're comparing it to last week. Because I've driven about 60,000 miles in FSD. I've been in Asia since August of 2023, so I haven't driven it in more
Hmm.
than a year. But I remember like, well, it used to not do roundabouts,
Yeah,
right?
yeah,
It used to have trouble with the suicide lane. You have two lanes going one way, two lanes going another way, and a median lane for making left turns. It used to be awful at median lanes, and now it does that. Like, it. I don't think like we're not capable of. I think the biggest thing is I drove 60,000 miles over the course of a year and a half. Let's say I don't think it was two. Maybe it was 2 years. About 2 years of driving FSD over 60,000 miles. Well, Tesla has billions of miles of data. Like the
yeah,
idea that I can accurately forecast the progress of FSD based on my small sample of driving mostly in Florida and a little bit of road trips, right? And road trips aren't really
yeah,
fair because you're on the highway all the time, and that's actually not FSD stack. At the time, it was not FSD stack; it was autopilot stack, right?
yeah,
Like my real exposure to FSD was probably more like 20,000 miles because a lot of my miles were on the highway, right?
yeah,
We're on autopilot stack. Like we are not capable just being human.
yeah,
Your tendency is to look at, is it better than the last? Like I would constantly see, oh, this isn't as good as the last version. Like, what are you talking about?
yeah,
We don't have the data to make that we don't have the volume of data to make that fine-grained
yeah.
assessment.
And
But I
and
can say,
yeah.
it used to not do roundabouts at all, and now it does roundabouts, right? And
Yeah,
it used to you know, not come to a full stop at stop signs. Then it was coming to a full stop at stop signs, and that was annoying. And then
yeah,
it started doing rolling stops because the NHTSA wanted Elon to start doing rolling stops. It was all this crazy shit. Um, I think that the idea that individuals can experience FSD and evaluate the progress from version to version is silly. But you can very clearly look back and say, well, how was it a year ago?
yeah.
And like, oh, well, it's a hell of a lot better than it was a year ago. Oh, okay.
Yeah,
Right.
yeah, exactly, exactly.
And then what we're really not good at is saying, okay, here's where it was 2 years ago. Here's where it was 1 year ago. Here's where it is now. And we tend to make a linear connection, but
Yeah.
we don't see the exponential improvement.
Yeah, and our brain, I totally agree with you. I don't claim to even know how to do that. I can't do it. I'm a human brain, right? Until there's Neuralink, it's just a human brain. So it's extremely hard to know, and that's why options are interesting. Like, but basically, we might be able to see trends where the market is still thinking linearly, and you might think, hey, the market's thinking linearly. And then we might think, oh, we know in general with AI, like a lot of these AI models are improving with the amount of data. Who has the most data? Tesla. And then we could just think like, oh, great opportunity. I think it's crazy. Like when people say, oh, like the traditional money managers, they're all like, oh, Waymo is winning. Like I was just in SF and you see Waymo, Zeus, every self-driving thing known to man is over in SF. And they don't realize it's like, no, they're not winning because 5,000 cars and the amount of miles that they have, they are programming the turns. Like I saw firsthand the Waymos turning right. They keep turning right because unprotected left is very difficult. So you can kind of make fun of them in SF when they're constantly turning right. And then but firsthand that Tesla is can do an unprotected left. Most people, like most analysts, will be like, oh, well, there's no difference. You turn right, you turn left. They don't realize fundamentally Tesla's AI and the others are probably hobbling things together to make it seem like a self-driving along a pre-mapped HD map of the city. The the
With human teleoperators, yes.
it's so different from Tesla's approach. It's because they cannot even hope to do that approach. Because in order to do that approach, they have to sell millions of cars, and I would argue electric cars, in order to get enough AI data to even compete with Tesla. So I think most people don't even realize that Tesla is so far ahead. It's not even a joke, basically, in terms of AI and full self-driving. So that being said, yeah, we probably agree on that. I think one thing is from my Model Y, I'm on hardware 3. Um, I must say, to put a damper on things, like I personally saw that I don't know if my car can get there though, because I saw like in the mornings and the evenings, it's like even if you have super genius AI, it I got rocked by the sun. So when the sun does the glare, there are issues. So what can you do? Like you can have a super smart brain, but if the sun is directly in the thing, as humans, we turn our head and we do this and we squint and that kind of thing, and we can deal with it. But with the camera placement, like what can you do? You're blinded. So in that case, I did find that as a limitation before Elon even said that hardware 3 is not going to fully make it. I
He
fully
didn't say that.
knew. Well,
He didn't say.
okay, he didn't say that, but I mean, he's pretty much saying that he's going to upgrade all the hardware 3 people. Like, I personally think that hardware 3, I don't know if that's going to be the one that it fully is functional without the upgrade because of the glare. I think that's one of the
I think
reasons,
he's sandbagging. I think he's sandbagging.
Really?
Ashok is like, we're going to get there. Like,
Oh,
who's closer to it, Elon or Ashok?
okay, but then how do you deal with the glare issue? Because I mean my
Why is that
FSD
not a
just
problem? Why is glare not a problem for hardware 4?
because they have a camera in the lower part. Like they have it up here, but they also have an extra camera down there.
That's not okay. That's only the Model Y, not the new Model 3. That's not a hardware 4 issue. That's a an SUV and Cybertruck issue. And it's and I I don't think that's a soft. I don't think that's a hardware problem in the processing. So we don't know, right? I
Yeah,
think probably Elon is correct, and they're probably going to upgrade. And I own two hardware 3 cars. Well, I really own one car, and technically I still own another car that I don't really own. So that's a long conversation. But my Model 3 is from 2018. It's a hardware 3 car. I'm hoping to get hardware 4. That'd be cool. But and here's the big question for you. When they upgrade hardware 3 cars, are they upgrading them to hardware 4 or to hardware 5?
yeah, that's true. I mean,
I mean, honestly,
yeah,
once you're ramping AI 5 hardware, why would you put hardware 4 in the hardware 3 cars? Why wouldn't you put
that's
AI
true.
5 in the hardware 3 cars?
That's true. That's true. But there's definitely hardware improvements between 3 and 4 though, because even for the side cameras,
Sure.
it has a greater range of motion, or like
Dynamic
what
range.
what
They
it
have
can
higher
see.
dynamic range and they have higher resolution. I agree that the
Yeah.
cameras are better but but people with one eye and imperfect vision, humans with one imperfect eye are able to drive,
Yeah.
right?
I
Car has
completely
like three or
yeah.
four forward-facing cameras. They're not all affected by glare, and the car has software. They have a better view of the even hardware 3 cars have a better view looking forward than a human with one eye, with
I
26 vision.
I agree. I agree. Other than when there's glare. So I mean, this is just something that we've researched is that there is overlap between the side cameras and the front camera for hardware 4, like a significant overlap, right? But then if there's no overlap, then you're actually you are dependent on that front camera. And if there's glare, then what do you do? Like a human with one eye will drive better in
The
that
car's
case.
designed, they've done this in Autonomy Day or AI Day or whatever, where they talked about how they're able to deal with occluded objects, right? The software figures out what it saw before the glare and what it's predicting is going to happen during the glare and what it's likely to see after the glare. The software sort of makes predictions just like we do.
Yeah,
We don't,
I
when a guy
I,
walks
I
behind a
agree.
truck, we don't assume the guy stopped existing. We understand object persistence, and so does, and hardware 3 understands it too.
I totally agree. I totally agree that, I've watched all those just like you and everything. I think the main thing though is when I'm on the highway and it's like that for 30 minutes, I don't think that it can survive without the front camera. So that's my personal opinion.
But
We
but
might
there
be,
but
different
new
on
Model
that,
3
but
doesn't have that camera.
but the side ones have a greater range of vision, so
Well,
it's different.
then stop talking about the front camera because that's not the issue.
Well, essentially a hardware issue. Like, is there a hardware difference between hardware 4 and hardware 3? I mean, I guess we can disagree on that, but like, I personally tend to think that you need hardware 4 and above, just from personal experience. But I mean, in any case, we're both
You're
fully
probably right.
bullish.
Look, you're probably right. I don't want to underestimate a joke.
Yeah, yeah. So yeah, I mean, it's cool. We disagree on something, that's cool. We're
Well,
bullish on
I
it, but
wonder if Elon is going to tell the team stop doing new models for hardware 3. We're
maybe because they haven't been upgrading my hardware 3, but then
Well,
Omar and
I've had
everything.
people are getting updates on hardware 3. I'm just saying at some point, if Elon really believed what he said at that, my opinion, if Elon
Hmm?
truly believed that hardware 3 is not going to get there, then I wouldn't devote any compute to hardware 3 anymore. I would devote all my compute to hardware 4. I don't know
Uh,
why they're
yeah.
devoting compute to hardware 3 anymore. Why are they continuing to update models on hardware 3 if they think it can't get there? Why would you devote compute resources to that when you have more and more hardware 4 data? Then you should be focusing on hardware 4. You shouldn't be wasting time with hardware 3 anymore. And
Yeah.
the fact that they continued to work on hardware 3 means they haven't really given up.
No, so I guess I disagree. Like from my like software lens, because I've, done a lot of software, there's a lot of benefits to like people who are on deprecated versions to support them because you learn a lot of stuff. So even though like say they're actually limited by glare, which I believe, it's you still learn a lot from all that data and all the interactions and everything. Like you can still improve hardware 4 from the hardware 3 cars and the
Yeah,
hardware
I
3
agree
data.
with that. You would still want to get the data from hardware 3 cars, but you wouldn't be updating hardware 3 models.
No, no, I disagree. Because from a programming point of view, it's like when you fix the bugs, you know it's not the bugs, right? You get better quality data and user feedback, essentially, right? So say people are all constantly taking it over because, it makes a stupid mistake over and over and over. You could say, oh, we're not going to be hardware 3, so it doesn't matter. Well, you're going to be feeding the data that's constantly taking over because of like a stupid mistake versus just fixing it in hardware 3 and then it no longer takes over and then there's a new edge case that you never saw before that's when it takes over. Then you're going to feed that back into both hardware 3 hardware 4. So I think like I see a lot of parallels like even working with AI software and all that stuff that's why people do it that way. It doesn't necessarily mean that hardware 3 is going to make it all the way.
All right. I think we can disagree on that one, and you know more than I do, so you're probably right and I'm probably wrong.
Yeah, yeah. But I mean, it doesn't really matter on whether something's like how it is on the very minutia. I think majority of people do not see the big picture though, right? Like the big picture of AI, big picture of whatever, like who cares if someone knows like how to do some type of programming problem or whatever, like what they do in Tesla, right? But in
Yeah.
general, it's like the big picture. It's like so many people do not see that. And I think um, I'm thankful for, the work that you've done to get the word out on your channel and others. And yeah, it's just been really great, a really great conversation. So yeah.
Okay. So I think this has been helpful, and I'm going to share this with people who follow me. before we go, is there anything you want to add?
Yeah, I think that's it for me. If anyone wants to follow some of our research, because we do some research and we have some opinions, and we have like opinions on how options can help and those kind of things, then they can follow along at voltequity.com, and we'd love to continue the conversation.
All right. Thanks, Tad.
Okay, thanks, Ward.